Good morning, everybody. Welcome, as always, to the Flow Show, Tuesday, 7th of May, sort of Monday for some of us who had yesterday off for the UK bank holiday. Morning, Kay. How's it hanging?
Morning, Ryan. Morning, everybody. It's hanging a bit to the left, but there's not a lot hanging, I must say. I'm feeling very sleepy looking at those markets.
Yeah, things
If
are...
one's an FX trader, I'm going to add, because if you're an equity trader, then the markets are still on the move. But in FX, it's a bit of a dull affair right now.
Yeah, very much so. If you're using TradingView, keep an eye out, because some of the price feeds are not working as well as they should. I keep flicking on and off. I think it's the same feeds that are using F.A.C.E or whatever feeds they're using have been going a bit wonky. So just keep an eye on that if you're seeing prices not moving. It's always worth having a couple of contracts open just so you can see those sort of differentials. Yeah, just keep an eye on that if you're using TradingView at the moment. Right, let's get stuck into it, because we've got an extra day to catch up on as well. Yellen was speaking about the yen, and she said it did move quite a bit in a relatively short period of time, and then added, we would expect these interventions to be rare and consultation to take place. It's her stance that interventions are okay as long as they're designed to reduce volatility rather than setting levels. But the market has been taking that as a bit of a warning to Japan not to go too far with intervention. Not that anyone over there cares. Kando refused to comment about Yellen's comments, so things carried on as they are in the market. Saw that as a bit of a reason to lift the yen. Someone who's still not happy is the head of the business lobby, Kinderan Takura, says a yen weaker than 150 against the dollar is too much. So he'll be hoping for another push. Again, he won't be happy to see it trading into the 154s at the moment. But that is where we're at with that one. Today, the RBA kept their rate unchanged at 4.35% as expected. In the statement, they say that there's a risk domestic inflation proves stickier than expected, even if interest rates stay steady. There was more than a few in the market looking for something more hawkish on rates to be put in the statement. They didn't really get it. Though Bullock, in her presser thereafter, was a bit more open to mentioning cuts, but saying that data is proving bumpy and that we are taking a longer view, but we must be vigilant on inflation risks, but believe rates are at the right level to get inflation back to target. Says don't think it necessarily have to tighten again, but we'll tighten if we have to. We might have to raise rates, we might not, and said that the board had discussed the option of raising rates but decided not to, and keep rates as they are. But then she said if services inflation gets stuck, we are going to have to act. So that was a bit more on the hawkish side, but the RBA very much a reluctant central bank wanting to move into overtly hawkish stance, but a little more open to being forced that way than, say, the Fed. Anything you pulled from that one, Kay?
Yeah, it's again a bit of hopium in the market for something stronger. No, I mean, I think she's a bit of a Powell disciple trying to walk both sides of the aisle. I got the impression that the same as every central bank or virtually every central bank apart from the Bank of Japan, I think they would all hate to have to rise to hike rates again. So bit of repricing post the meeting, because somewhere indeed expecting something more hawkish, but we're just coming back to levels where we were before, and Okay, Aussie a bit weaker than where it was at its strongest, but we're still turning around the levels where we were before. That bit of speculation came in. It's not really, yeah, I mean, it's just a give and take meeting. I mean, the data, if you look at it outside from inflation, the data are really not supportive to add another hike to their 4.35% right now. So bit of repricing and moving on.
Yeah, but we have to remember that Australia was one of those banks that went on pause and then had to hike again. And if you guys and girls remember back 18 months, a couple of years ago, they were saying they weren't going to hike until the earliest 2024, when all inflation started kicking off. And we're in 2024 and they're trying not to hike again. So yeah, it shows you what they make of their forecasts.
Low was a bit of a weather vane, right? And Bullock, as we noted, was already a little more hawkish when she took over on balance. So perhaps that is just what the market is now trying to figure out. But I just taking it into context, what and how she speaks and everything is, to me at least, it's a very neutral meeting.
Yeah, very much so. Obviously, no forward guidance from that one anyway. So back to data watching we go and seeing what the dollar wants to do, the US dollar wants to do on the other side regarding that pair anyway. Right, coming over to some data. I'm not going to go over all the data that's been out because obviously there's like two and a half days worth. What couple of things I do want to pick out though is we had PPI data from the Eurozone, which came in at minus 7.8, which is slightly lower than estimations of minus 7.7. Still a negative number there. PPI month for month, still a negative number there. So still some disinflationary pressures for the Eurozone there. Today we got some retail sales data as well, and some green shoots seen there. Month-to-month retails beating expectations to come in at 0.8% versus 0.6 expected year on year, beating expectations as well. That came in at 0.7%. Was expected to come in minus 0.2%. So decent numbers there. However, one piece of data I will want to go back on is German factory orders, which were expected to rise but came in quite stinky at minus 0.4%. So those green shoots getting another stomping in the data. So still going to have to wait a bit to see a real recovery coming out in Germany. Just one other bit I wanted to point out as well. French wages, French wage data, Q1 wage data. It's got non-farm payrolls there, but the wage data is more the standout for Q1. It came in up 1.3% versus 0.4% previously. So quite a strong number there on wages. And obviously wages is a big watch point for the ECB, many in the ECB. One of those being ECB's Lane, who said that confidence on inflation is improving and that we shouldn't exaggerate the impact of the ECB and Fed divergence, even though a lot of them have been doing just that. ECB Simkus, one of the doves, says unless we see data surprises, rate cuts should not be limited to just June. He's sticking with his 3-cut call for this year. What we'll do is jump back quickly to look at all that US data that we got on Friday, because a bit of an overreaction in the market. Firstly, the headline number missed expectations, was expected at 238, came in at 175. So that's one of the first misses in a long time. Still not a bad number though, 175, nothing that anyone should throw their toys out the pram over. The unemployment rate though did rise to 3.9%, and that was with the participation rate staying unchanged, so no influence from that one. So that unemployment rate was a touch worse. Wages also came down to 3.9%, were expected to only drop to 4%. So slight misses of expectations is the way to describe this data. Not that you would have thought that from the reaction we got. It was if the jobs market was collapsing on Friday. And we saw the dollar getting a bit of a knock on the head. But as we know from what Powell said, it's going to take a meaningful trend lower in jobs before they look to hike. They didn't stop the market going that way right after the data. Fed fund futures pulled forward their expectations for the first cut to September from November, making September a 78% chance versus 63% before the data. Also, the market stepped up cuts to 2 cuts for 2024 versus 1 going into the data. And that caused a bit of a knock on for everyone else because investors fully priced their first Bank of England rate cut for August, and that was from September on Thursday. And then for the ECB money markets, pricing in 77 pips of cuts in 2024 from 70 pips of cuts. So a mild change there as well. Kate, that NFP data, the world must be ending, mustn't it?
Yeah, I mean, again, bit of an expectations thing, and then needing to reprice a bit, and then it's all. How should I say? I mean, it's not a bad report if you look at it, because if you would look at the average of the creation of jobs that we've seen over the past year and a half, 2 years, I mean, in normal times, the US would bite your hand off to have such kind of numbers. We're still sub 4% on the employment rate. Yes, the earnings are coming down. It's all going in the direction that Powell would like it. Okay, the doomsayers are saying that, look, this is the start of the collapse of the earnings. This is underemployment is worse, but then they've always been expected it for the next meeting, and now it's the first week meeting, so those people need to write pages full of "I told you so." But then the market had exactly the right reaction. I think it's a right reaction to at the time sell some dollars, but also there's nothing in the report that says the dollar or the US is doomed now. We are going to need to wait for the next report. A lot of people are calling the top in the dollar now. I don't think so for first. But I'm not sure whether we can get a lot further. But yeah, this is just somewhere a middle of the road report. I think it's just what people were looking at employment indices on the rest, and then I take that ISM stuff in the mix as well, because there we see the employment index coming off further, right? So it could be that we are at the start, but is it going to continue? Then we have to go back to what we say on a daily basis: data watching. We'll have to see if the next data is doing it. I mean, I know you traded it well in the Canadian dollar. I traded it all right because I thought it could happen, but I took my profit on the euro dollar longs. I took half off of my 152 put in dollar yen, and because the reaction seemed a little bit overdone compared to what the actual numbers were telling us. Yeah, it's cooling down, but if it's cooling down over there, it's probably cooling down everywhere as well, as we can see from the bond market afterwards. You look at the differentials, bit of a spike, positive or negative dollars, and then we're coming back into what we've been trading for quite a while. It's still one big bond market, so FX is still stuck, so in a way.
Yeah, we saw that unemployment rate or that unemployment number coming down in the PMIs, and it has been looking on the weak side, but it's been looking on the weak side for quite some time. Very rarely strongly above that 50 level, and perhaps spending a bit more time under it. So that hasn't really yet reflected through to, you know, things like the NFP. So, you know, even this private survey data isn't capturing as much as the NFP survey does, or there's other factors, because you can counter that by saying, well, jobless claims haven't raised any flags as well. So maybe there's a bit of discrepancy between data points. You know, this might be the start of a bit of jobs weakness, but we won't know until we get the next report, and we'll probably need one after that just to confirm it. You know, if next month is you know, back on track, you know, 200+ K jobs, and you know, the unemployment rate falling back a bit and wages lifting again, then with the pendulum swings once more. It's too soon to start calling the end of the jobs market, I think, right now.
Yeah, and also don't forget that the one you're showing there, it's a diffusion index, right? It's not like an how do you call it? The other term, I forgot it for a minute. It's not like a pure, I mean, index. It's a diffusion index. It's not as if the jobs market is completely collapsing. It's just that less people are more positive as well. Against that, we had the prices flying again. That's not for their liking. Yeah, we see there the non-manufacturing prices have risen. And holding around past levels, so that's not really for their liking yet. So we have to take everything into account, take the whole basket, and then coming out of that, it's I would say, if anything, rather neutral, unfortunately.
Yeah, well, I think I agree with that. Well, of course, Fed heads, the trapdoors are open, so they've all come running out as they want to do. Fed's Bowman last week was saying that she's willing to raise rates if inflation stalls or reverses. Big hawk over there. It says, I've not seen further inflation progress this year and still see a number of upside inflation risks. Fed's Goolsbeast says that 175,000 new jobs is a very solid report. The Fed must get comfort that recent inflation is not a sign of re-acceleration, and staying restrictive too long means the Fed will have to think about the employment side of the mandate, but current numbers are solid. Fed's Barkin said inflation data this year is disappointing and the job is not yet done. Given the strong labour market, the Fed has time to gain the confidence needed to be sure inflation will fall. Says he doesn't know if there will be revisions to the June economic projections. Fed's Williams says he's seeing the jobs growth moderating. Says eventually there will be rate cuts. Says consumers are still spending, but he's seeing signs of increased consumer caution. Says the economy remains healthy, but is growing more slowly. Further on the old rate cut guessing game, gold is now, or still expect the Bank of England to begin cutting rates in June. JP Morgan now only expects 75 pips of ECB rate cuts this year. They were at 100. They've stripped out their forecast for an October cut. We've had a bit of geopolitics out over the last few days. Obviously, a lot of stuff going on with this Rafah offensive thing over there, but the market pretty much taking that in its stride. But Russia is stepping up the chatter. The Kremlin is saying that their tactical nuclear weapon drills that are going to be taking place are in a response to statements from the West about sending troops into Ukraine. And then another headline said that Russia may target British military facilities on Ukraine territory and outside in response to Ukraine's strike with British weapons. That was the Russian Foreign Ministry. Currently, as we're going through this, Putin is going through his inauguration process thing after amazingly winning the election over there in Russia to get a new term as El Presidente. That's all I've got on the headline front. Kay, anything you've managed to dig up from this quiet market?
No, exactly. It's been relatively quiet. Loads of opinions, left, right, and center, but very little headway in the FX markets. Right? It's been relatively quiet. I haven't really seen much market moving coming out. Yeah, I mean, we still have those lingering issues in the Middle East and Ukraine, Russia. Yeah, I expect Putin to be coming out all guns blazing on what is going to happen and everything. But no, I think the market is already looking to the few central banks that we have this week. I think that now we had the RBA, we've got a few more coming up. Maybe that's what the market is looking at. It very much feels like this is a market on hold, and the big money is not really doing an awful lot.
Yeah, I think so. Particularly, I think in the yen as well. I think that a bit of a surprise intervention last week, the second one, which didn't really tick sort of the volatility speculative box, has maybe just sown a bit of doubt in markets' minds. But this week can be a bit of a quiet one after the NFP week, particularly as we had the Fed last week as well and big data. As Kay mentioned, we do have some other central banks. Tomorrow is Riksbank, though it's not on that calendar. They're expected to cut 25 pips.
It's a close call.
Which what, sorry?
It's a very close call.
Yeah, it seems close.
The majority is leaning that way. Like kind of a hawkish cut or so, but it's still a very close call. I would say that they cut. The thing is, they are meeting now, but then they don't meet anymore until the end of June. So it could be that they front run the ECB a bit.
Yeah, because I'm surprised it is a close call, because they've been saying themselves that they pretty much expect to cut this month, and it will take a lot to change that. I mean, they've had inflation going their way, which was lower than they expected. So I don't see a reason why they wouldn't cut.
No,
they did say other central banks were the risk, no doubt pointing to the Fed. But as the Fed weren't hawkish, again, I don't see why that would stop them. So yeah, maybe there is a bit of room for movement in the Swedish krona if the market's a bit split.
Yeah, if they do cut, that's going to give the market food to sell Swedish krona, I think.
Yeah, I think it might be one of those. I think this might be one of those ones where we're gonna need a bit on the forward guidance side of things as well. What they're going to do thereafter with rates.
Swedish krona already weakened, but then I suspect the market is in a little bit of a holding pattern now, because they spoke like where it is the close call that the market is talking about, is that because they were not too happy about the sell-off in the Swedish krona, so they could still hold. But if they do cut, I gonna say personally, I don't think the statement hawkish or whatever will matter. The matter is that they will cut, and that brings their interest rates a bit below the rest. So the market may be tempted to go and sell some Swedish krona on the back of it.
Yeah, no, I think that's very much so the case as well. So anyway, that's coming up tomorrow morning. So we'll see what happens over there. Thursday, we get the Bank of England, and that's going to be a pretty big one, not for any real action, but because it's also a forecast meeting as well. So we get the latest updated forecast. The other bit of spice is probably going to be in the votes. 8-1 was the vote to keep rates unchanged, with Dingwa voting for a cut. It's whether she's joined now by someone like Haskell, who was out, Ramsden, who was out being pretty dovish in his last outing over a week ago. It's one of those things, he was at dovish. It's going to be a shock if he's not on the cut side this month. So some in the market expecting 8-1, some in the market expecting 7-2. So two people going over to the cut side. That's probably about as reactionary as we'll get on the announcement itself, and then we'll see what they have to say in the statement. And obviously, it's a presser with Bailey. He's not going to be hawkish in the slightest, no doubt. ECB minutes out not long after the BOE. I'm not sure that's going to be anything too much to note that we don't already know. But BOJ summary of opinions. I think that's on the latest meeting, isn't it? We had the minutes the other week, which was for the March meeting, and I think these summary of opinions are for the last meeting that we had. So we'll get to see if there's anyone changing any views in that. Probably not. Some GDP data on Friday from the UK, and then we get Canada jobs, which are all on their own. We didn't get them last week with the NFP, so that will give us something to watch. Just as we finished the F.A.C.E show on Friday, and then the Michigan survey coming out later on there. So overall, not a huge data week for that. Then for the weekend, we got some China price data coming in. Have they managed to pull themselves out from that small deflationary spiral positive number last month? Can they continue? Or are we going to go backwards again? So keep an eye on that one. So that's basically it. Anything else you've got spotted on the calendar? We've got some auctions this week, Kay, but
yeah, we have.
They're going to get much focus after Powell done Yellen a favour last week.
Yeah, I mean, sorry, looking at the yields where they are, they should find enough kind of candidates. That's where the surprise would be if they fail a little bit after those yield moves, because we do have threes, we do have tens. So yeah, keep an eye on those auctions. Have we spoken about UAE visiting the Prime Minister's office this morning?
No, because they always have those meetings. I don't know why
Sorry?
the market. They always have those meetings. I don't know why the market got in a flap about it this morning.
Well, I mean, I don't think that this one was part of the regular ones between the MOF, Bank of Japan, and the government. I think Kishida wanted to know what's happening now now that they intervened, you know, and so the market sold a bit of dollar yen on the back of it this morning, and then once he came out of the meeting and says that nothing special is happening, we're back to where we were before.
He probably wanted to know how much they spent.
Yeah, probably, and Ueda would have said, would have told him, yeah, look at my numbers. We've already published them, even if the MOF doesn't want to. They're already all out there. Yeah, the other one, which may be of interest to those trading emerging markets, we have especially Brazil and Bank of Mexico out this week. So Brazil tomorrow, they're expected to cut 50 BPs, and then Mexico the next day. I mean, the possibility, because inflation has been dripping lower, the possibility is there that Mexico will cut another 0.25%, but that would put them at 10.75, which is still about 5-6% above where everybody else of interest is. The rest of the LATAM central banks are more eager to cut bigger. So Brazil is probably going to cut 50 BPs for those following. And by the way, prayers going to the Brazilian people who are suffering from all this flooding and stuff. It's an absolute nightmare over there. So please be safe for those who listen to us from Brazil.
Yeah, very much so. Mexico, they're not expected to cut. I think we had Heath out the other day saying that they're probably looking to keep rates on hold. Do you think maybe the Fed decision last week is going to be a bit of an influence for that side of things?
They will look at the Fed. There's no secret either. I mean, the Banxico governess said as much. They are looking at the Fed. So yeah, they could be on hold. But no, I was just thinking there is a fair possibility that they do just 25 to well, yeah, just because they are still so very high. Now we have to know that Mexico, a lot of the money is not stationed really in Mexican peso. So I'm barring a knee-jerk reactions of some sort, it may not have too much of an impact. Just more than half an hour after the announcement. That's all possible,
Yeah.
but we'll see about that on Thursday then.
Yeah, right. Well, it looks like the market has got its magnifying glass over Japan because the headline has just run past saying that Ueda will be having a press conference on 5:30 on Wednesday. No detail about what it's about or anything like that. But these headlines keep flying past. He's got to visit the PM. He's having a press conference. A lot of this stuff is regular stuff, but as I say, the focus, the magnifying glass is on Japan. So every little thing, we'll probably hear one of those trilateral meetings that they have regularly. We'll get a pumping probably when the BOJ, the MOF, and the F.C.E. meet up. Anyway, no detail on what that press is all about, but as I say, anything going on in Japan is getting thrown up on the headlines now anyway. So just to get the yen moving, no doubt. So speaking of the yen, where are we at? Well, we've had that bounce. The levels that we've all been looking at, that 160, obviously, 155, which obviously got taken out last week. 152, still in the mix. We had a little knock through it by whatever, 12, 14 pips, but we've bounced from that. So I'm not interested in messing around in the middle here. If I'm going to do anything, I'll probably try and do it from the short side rather than the long side. But you just got to look at the levels. You know, the Ministry of Finance isn't a technical trader. They're not going to be putting Elliott waves or RSIs on their charts. So we just have to monitor it by some of these bigger levels that have shown up. So 152 still the one down there. 155, we'll see what happens if we get up there. Is it going to encourage sellers to come in and knock it on the head? The market has shifted a bit, Kay. Not so many people are willing to go as long in this one. But I don't think we're yet seeing big outright shorts coming into this one.
No, the thing is, we're still. We had a bit of influence, I think, on Friday we saw it, right? Because we went down to 152 on that miss on the US jobs reports. I think perhaps somebody needed to print that or so. And then we started to jump again. So 152 is really where the line lies to me. But yeah, if nothing else happens, I think this is going to gradually go back up, whether it's dollar yen as such or yen pairs in general. But I don't think that the carry traders have been complete. They had a scare. Short to medium termers have probably gone away because they understood what's going to happen, what was happening. But the longer termers, I don't think that they have been wiped out or stopped out or so. That's still not going to be the case, I think. Now, as I said, if nothing happens, this is still a very very low yielder, and I'm still not in the camp of starting to sell rips. I mean, you sell rips if we do 200-300 points in a day or 2 days, and then hope for an intervention. And
Yeah.
unless, and I would hate it because my 152 put expires this afternoon, unless Ueda really comes out and does a surprise hike, then you are going to see probably quite a big reaction initially. And then which may last a little while, and then we will see where those yields in Japan end up, because that could in turn then trigger a move by more of those Japanese whales saying like, oh, perhaps we are getting into more interesting levels to get back into Japanese bonds, and that may cause a bit of a shift in of money flows, and thinking about perhaps inflows then. That if they do a surprise hike, then we really need to rethink what's going to happen with the yen. If it's just a meeting to confirm what he's already been saying, or a press conference to confirm what already been saying, then yeah, I I fear that the yen is going to be under more pressure again.
Yeah, no, I think so. But I wouldn't put it past the wise just trying to stir things up by posting every little meeting and whatever. You know, we get headlines saying you either got into his car 10 minutes later than he normally does, or something stupid like that. But that's the way the wires are. We can talk about this 150 level, and like you say, I don't think many people are going to be folding. All the short termers who are perhaps long in this area. And maybe coming into the start of the year, you know, they're the ones who are going to be getting worried with these moves up here. But I think that 150 level may be a bit of a pivot point for some longs, particularly in this rally since the start of the year. If we get below there, it might, you know, get them thinking about maybe taking a bit more profit, and then we see a bit of a acceleration. But obviously, people who have been long all the way through from you know, last year, they've got no worries until, you know, maybe 148s, 147s, that sort of level. But it all happen. These things happen in stages. You get your longer termers, you get your medium termers, and then you get your chasers up the top, and they're the ones who get spanked around in that move, in those moves there. So 150 is probably a bit of a pivot level for a few more longs to think about heading for the exit door, and then you move on to the more longer termers on that one. Kate, do you want to have a quick look around? Charlie's asking about Aussie Kiwi.
Yeah, I've seen it.
Is this a dip buying up? Well, obviously, we cannot give you trading advice, Charlie, but you know, by all means, let us know. Do you think it's a dip buying up? Let us know what you think. Don't just take our word for it. We want to hear from you guys as well. So
let's look at the Aussie Kiwi. And well, if you think it's just a temporary blip, if you think that the RBA was very neutral, that we're just cleaning a little bit of positions, you're looking at this 109.60s roughly. Stretch it to 45 perhaps. 109.50, 60 is if that holds, then it's going to be a buy on dip. I have no clue in what's going to happen on the Aussie Kiwi from here, because I have zero view on the Kiwi. I am a tad short Euro Aussie, but I don't know about the Kiwi side. Really, I have no idea. But I can imagine that if you look at this top, from where we started again, then we see this trend line, bit of support line. I can imagine that anywhere here, people will try to hoover some and see what happens. It is very possible. I really think it's been such a neutral thing that you just keep your base ID in whatever you want to trade, and once the cleanup of the books is done, we're just going back to trading what we were trading before. So in this case, unless there's anything really positive coming out of Kiwi land, I could imagine to find some buyers around here. Brent got short yesterday in $AN 153.60, already stopped. This is big. All right. Okay. Thank you, James. I want to have a quick look, and what was I looking at? Yeah, cable. It looks to me, so we had this Monday, so we had a spike there on the NFP, then we came in on Monday, we had another run higher, and look where it stopped. I said, like, well, 80, 90 figure on the cable, and we stopped right there and started to come off again. This trend line, of course, is going to be watered down over time because we are getting closer and closer to the market. But anyway, I was rather looking at this level here, 125.90s, and now we are trading the other side. Looking also at what's happening in the sterling crosses, and then especially euro sterling, which is the proximity trade, right? Euro sterling is bit. I do think that the market is kind of gearing up for a little bit of a dovish meeting coming. Whether it's in the facts or in the actions, as Ryan said, I doubt it. But with Bailey, you never know whether he's adding a third one to those voting for cuts, and that we could have all of a sudden a 6-3 vote, which would then be taken as negative by the markets. All right. So I'm not really going to chase anything, but in the assumption that also the dollar is holding relatively okay. I could see this try and trade a little bit lower, but we'll have a look at it closer to the Bank of England. But in any case, I think this here 124.6070. This is the not going to say the magic level, but that's going to flash a lot of lights if over the course of this week we're starting to trade below. I think that's really because this is a short-term one, and that is really going to flash a lot of lights. I think if that breaks at any time today and this week in the cable, that's specifically what I wanted to highlight in this. Yeah, Ryan, you covered the Canadian dollar, I guess. I forgot about it. Or no?
No, I didn't. No, I didn't.
Didn't. You want to do it once I'm done?
Yeah, can do. Have a quick look. Yeah, no worries.
Okay, yeah. So 2 days from now, Banxico dollar mix is just slipping down again. What I said over F.A.C.E yesterday as well, and already over a few meetings here. We have those panic spikes that we sometimes see in the dollar mix. We had a big one back in April. We had another one end of April. And what happens afterwards, and also helped obviously by better equity markets, it's just like slipping and sliding again. This can trade lower, but I would respect this zone here, anywhere around 1680, okay? Because it has been traded in the past already a few times. It was the springboard to start also that moved higher, and it was our low last Friday. So watch what's happening around 1680 ahead of Banxico. I'm going to say perhaps this is enough ahead of Banxico, but we of course have to see what happens to the rest of the dollar. The other one that I showed as well on last week's shows and regularly is the Euro mix. Also preparing this one for Thursday. Also those same spikes, but if you look at the overall picture, and that's going back all the way to 2022, but you can go all the way back to post-pandemic, to the pandemic highs. Actually, that trend lower is still very, very strong. I keep a close eye on what's happening around in the low 18s here. We are trading around 1815, 1816, around our neutralish level here, I would say. But if it goes up here, even if they cut and we see a bit of a reaction up here, if they cut like 25 BPs, depending on the statement that goes with it, of course. But even if they cut 25 BPs, I'd be surprised if we really break above 1850, 55, and perhaps already finding sellers in the 1840s. And that's something that I'm going to keep a very close eye on this week. Any rallies, I may actually even front run it, to call it that way. But first, let's see if we even get there. Moving through 18 post Banxico is in my opinion going to put pressure on this one to the downside again. Quick look at what's happening in our buddy, the Swiss franc. Euro Swiss, not a lot to say, although because we're still turning around this 97.75 here. We saw a bit of weakness creeping in, but we are also in this little box here, 97.30 down to 97.10, 97 the figure. We are finding a bit of bias here, and now we are back to more neutral. But all in all, I would say this is still relatively positive for developments, unless something happens on the euro and the dollar Swiss. And I know that our friend Bubble Boy in the room was talking about this 90, 89, 80, 85, 90 on the dollar Swiss. It's a little bit of a level, prior high, prior lows, bit of a small trend line here. But what I also note is that we are just trading along this ascending trend line here. So for as long as that we don't get closes above below 90, 15 towards 90 the figure psychologically, I still think the overall picture is quite positive for the dollar Swiss. Okay, if we start to get closes below 90 the figure, then I'd say watch out, because then we could go all the way back down to 89, 88, 90 again, where the peak. This is what I would compare to the 152 in dollar yen, perhaps. This 88, 90 figure. It's been really traded on both ways of the ride in dollar Swiss. So I think this is a big one. This is a bit further away, of course. And you know what? For today, gold range. Okay, we had those dips, and now we are back closer to this 2320s. Bit of a, albeit still very positive, bit of a neutral zone here in the 2020s. Silver held that those low 26s, where it the first level was lying. Take this trend line away. So that held. We did not go and visit our my second levels. So I loaded up a little bit, let a tiny bit go this morning. Still thinking of just continuing to load up and sell on rallies there. And with that, back over to you, Ryan.
Thank you very much, mate. I'll go back just quickly. I haven't got awful much more to add to that. I'll take a quick look at stocks, S&P, back up to this zone. When we had a bit of volatility, it wasn't much in that area, but obviously has got prior history here. But here we are again, back up. We've been away for a while, for a couple of weeks, and it's showing up again. So this is one to keep an eye on. If we get above there, maybe we're going to have a run up towards those highs, 52s again. See what happens up there. If not, then that potentially keeps this downtrend alive, meaning we can have a move down again. But it's trends within trends within trends is probably Gregor's wet dream for old Elliott waves on this one. Probably Dale will be having a word about that on Face later. We shall see. Oil's had a bit of a breakdown as well, or continue to break down. As you can see, started in April, this move. We had a bit of an acceleration on Friday as well, or last week. But we are just holding up ahead of this 50 fib down here at the moment. We do have some daily, daily moving averages down here as well. The 100 DMA catching this move as well. So bit of support coming in here. If we break that, then this may upset a bit more of this shorter term trend that we've had this year and see things moving lower. Conversely, dollar CAD's been, or CAD in general, has been on and off the oil bus. Sometimes it's on, sometimes it's off. I think if we get that breakdown in oil, then we might see a bit more movement coming in to this one. This was the one I picked up. I decided this was my NFP overreaction trade of choice. I picked it up down near the lows there. 136.50 shown up again yesterday. So we've held that level. It's been a bit wishy-washy. We've had the prior lows down to this 30 area, but again, we've been away, we've come back, and that's where support is holding for now. We've got to get through that 137 level, but that, as I say, that might need oil breaking down a bit further to give it a bit of impetus there. Conversely, if we see a bounce in oil, that may do for the 136.50, and we have a test down to 136 again. So just I think a bit of range playing to be done this week in a lot of pairs. There's not much on the data front to bring any big news or big moves. So yeah, probably a good week for playing some ranges and getting the sniper rifle out. And on that note, we shall call it a day. Thank you very much for coming to the Flow Show. Do have a great week ahead, and we'll catch you all up tomorrow. Have a good one. Cheers, Kate.
Cheers, guys.